Hello, 5-Minute Trader here. It is just after the open on October 30th, 2024. I would have recorded this a few minutes earlier, but as with most of the north of the country now, there's constant leaf blowers going everywhere, and they were so loud that they weren't even being blocked out by my sound stuff in here. So anyway, it's all fine. I'm good. I'm going to do a quick overrun as quick as possible, and then a quick kind of TLT special here, because there's been so much happening in TLT recently that it's worth a little bit of a deeper dive. So we might go to 10 minutes on this one. Let's see. So here I'm in Tasty Trade. There's a link to sign up for Tasty Trade in the description. That really helps out the channel. But let's look at what we got. We got gold and the metals in general moving down today. So both gold and silver are down. GDXJ, SLV, and GDX. Natural gas is down again a little bit. The emerging markets, that's EEM, is down a little bit. And then, in fact, the markets, like the equities, are kind of flat, which is interesting. So typically, not always, but typically, when equities go up, metals go down, and there's reasons for that we don't have time to get into here, but that's most common, but it's not always the case. So we've got a situation here today where metals are down and the markets are flat, but we'll see. Maybe later in the day the markets will start to drift down a little bit. Who knows? TLT is up and oil is up, so that's good, because if you remember yesterday, I was talking about this one oil position I have, which is in the money, which technically means if that's in the money at expiration, that I will get assigned 100 shares of the ETF USO. And what's happening right now is, because USO is going up, this is getting close to being out of the money, which is a good thing. But what I might do is I might roll that out to a future month, since it'll have gone up in value today. I might roll that out to the next expiration, which is at 51 days. So people have different rules for this. Some people roll all the positions when there's 21 days left. I like to roll mine when there's 45 days in the next expiration. That's just become my preference over time. But if we look here, if I were to buy this back, I'd buy it back for around $2.10. And then I'd sell the same put, so that's the 71 put, in December, which is right now at $3.70. So I would collect, what's that, $1.60 to roll it. So I earn another $160 for that month, for those additional 30 days or whatever it is. And it also gives me more time to let USO drift up. I don't lose any money. In fact, I collect more money. The only downside, if you could argue it's a downside, is that I keep money locked up in that trade for another month. It's always a perfect world where you can get out of the trade within the timeline that you'd originally set, but that doesn't always happen. So, but I'm not losing any money. I'm still making money on USO, even though the ETF has gone against me. Right, so that's one of the beauties of selling options, is you've got a lot of flexibility. TLT is moving on up. Let's spend some time there. So just to kind of round that out, actually, with the metals being down, so GDXJ is at an 83 IV rank, SLV 83 also, GDX at 64. So let's look at the charts here. So they're down. They are down from a high, but they have very high IV ranks, the metals. So this could be a good time to sell a put or a strangle, or if you want to limit your exposure, do something like an Iron Condor or a Jade Lizard or something like that in either GDX or SLV. Either way would be fine. Like if I were making a decision, like GDX is down a little more than silver is right now, so I might pick that one because it's a little cheaper, it's on sale, it's more chance of it have already made its down move. Let's take a look at TLT. So let's go to let's go to 10 years. Okay, so TLT is the bond market. Typically the bond market moves when the Feds make decisions on interest rates. So if like it's been the case for a while now, since post-pandemic inflation and things like that, interest rates have been high. So as we look back, 10 years, we've got these peaks coming up here where the bonds are. As inflation eases, the Fed have started to keep interest rates where they are, and then they'll start to bring them down. As that changes, TLT will change. So you can see here over the last sort of month or so. Let's go to 1 year. Over the last month, they've started to come down because the Fed have been signaling and making moves to bring interest rates down. So what that means is that it's moving. That's all that really matters to us, is moving around. We've also got an election, a presidential election next week. You might have heard of that. That can lead to volatility in markets and things like that as well. TLT in general has been moving around, and it's got a very high IV rank. What that typically means is that the options are pretty expensive. So let's do a comparison, and this might work, it might not. So we've got TLTs at 93. I don't think there's another. The closest ETF to that would be USO, which is at 70, so it's cheaper, but we'll try it out. So let's go to TLT, to the 16-day, and let's look at the 30 delta put is right around 90 cents for that 30 delta put. We go to USO, 15 days, the 30 delta put is actually it's interesting. See, it's actually at $1. So this is classic. Like the idea that TLT's IV rank is high, that means that its implied volatility is higher than it's been historically. But as we can see, just by looking at the price of the options, the actual volatility itself is not that high compared to other instruments we have access to. So let me make that even more clear. This is the randomness. So whenever you watch like whatever money program you watch and they're like, oh, this is going to move, that's going to move, a lot of that is just made up. It's just people guessing the future. What we can look at in reality is to say, what risk am I willing to take and what am I willing to get for it? So if I were to open up that 91 put, so it's a 30 delta put. So it has essentially the same probability of success as the other one there. I'm going to collect $87 and I've got a max loss of $9,000. $87, max loss of $9,000. Let's look at USO. So I'm doing the same expiration, right? Just to make sure I'm not messing up here. Make sure I'm doing the same expiration. Yeah, okay. So this is the 16-day, so it's November 15th. My max profit is $86. My max loss is $9,000. Let's go to USO. That 30 delta, so it's 29 delta. Look at this. I'm going to collect $104, and my max loss is less. It's $6,600. So I'm exposing myself to less risk, and I'm making more money. So there's a lot of talk and all the networks right now about the bonds. The bonds are moving. That's great. They're coming down. They're up a little bit today, but generally they're coming down. Oil has been coming down right now. It's like bouncing a little bit today. So if I were to say, okay, everything on all these financial networks is telling me to look at bonds because it's moving, but I can actually expose myself to less risk and make more money by trading options in oil. So this is just something to think about when we're listening to the market, to the media chapping away at us. The beauty of whatever brokerage tool you use, Tasty Trade I find particularly easy to use. and that's my preference. But any tool will go in. These are publicly traded options, so they'll be able to tell you exactly what is happening and how much you can collect for how much risk. My general philosophy on trading is I am not particularly interested in trading directionally. So I'm not particularly interested in saying, okay, oil is really low. Like, this is just an example, and I know I'm way over time here, but that's okay. Let's just say, for the sake of argument, oil is low, and I'm watching whatever financial network, and they're talking about the election, and they're saying, well, if Trump gets in, he's gonna, increase U.S. oil production. So that's gonna bring the price of oil down. So I'm going to take a short position on oil because I think it's going to get cheaper. There's a major issue with that, and it's that you cannot predict the future. The prices of things like oil are so complex, and they're controlled by massive oil producers in the Middle East. They're controlled by OPEC and things like that. There is absolutely zero guarantee that if Trump gets elected, oil goes down, or if Kamala gets elected, oil goes up. Because if you're the opposite, you might be like, oh, Kamala's going to get in. She's going to reduce oil production, so that means the price of oil is going to go up. So I'm going to buy oil because it's going to go up. Right? There's an issue there, which is you cannot predict the future. So to get down off my soapbox for a second, what you can do is you can look and say, okay, I can earn $117 in 16 days. I expose myself to $6,600 of risk. That is if oil goes out of business. And because I'm collecting $1, oil can go down to 67 before I lose money on this trade. And even if it's down to 67, I can roll it out to a future month and still make money. That's why I sell options. Is because I don't need to sit here and prognosticate about the future. I can just look at the reality. If I wanted to get a little more money, I could come up here and sell a call too. If I look at it and say, you know what, I can sell a put down here at what, 68? Where is 68? 68's way down here. So I feel pretty good about that. How high would I want to go? Let's say I probably would want to stay between 76 and 78 on the call side. So where's that? So it's way up here. It's pretty high. So these are pretty cheap, actually. So that's like the 20 delta. Okay, now I'm collecting $1.80. Now I technically have infinite risk here, which is a bit of a problem, right? But I could then buy a call. Now I'm collecting $1.18, and I'm back to my same max loss. And if I go to curve, I can see that I make the most money in this zone here, but even if oil blasts through the roof, I don't lose money. I don't get why everybody doesn't do this. This, to me, is the way to trade, is to sell options, because it gives you so much more flexibility, and it's so much less stressful and anxiety-inducing for me personally. Okay, so I know this one's a little bit long. This was your TLT turning into a little bit of a USO special. If you find Tasty Trade useful, please sign up with the link in the description to continue to get these videos. Hit subscribe. If you were into this, give me that like. But hey, I don't have a lot of time to argue and debate, but if you want to put your opinion, go ahead and drop it in the comments there. This was a fun one. I might do some more of these specials. Let's see if we can do them like once a week or something. All right. Thanks all. I'll talk to you tomorrow.